Is the loan approval process really as difficult and scary as you think? Well, I'm going to tell you about the 4 steps of the mortgage loan approval process, then you can decide. The Mortgage Minute, presented by me, Laura Borja, your San Diego home loan expert. The mortgage loan approval process begins with the loan application. Now, a lot of what I'm going to tell you about will have already been taken care of if you went through the process of getting yourself pre-approved before you went out shopping for a home. But let's pretend you didn't. During your initial interview, your loan officer is going to obtain a full mortgage credit report with information from all 3 credit bureaus for all applicants. You will also be asked to provide all of your income and asset documentation. That means that bringing in your pay stubs, W-2s, and tax returns, as well as bank statements for the accounts that are going to be included in your application. At that point, you will also be providing any additional documentation that applies to your situation, such as letters of explanation, divorce paperwork, or bankruptcy paperwork. This initial meeting will also be when you and your loan officer will discuss your available loan options. So once you and your loan officer have determined the program that's going to be right for you and all of the initial documentation has been put together, then your file will be turned over to the loan processor. Welcome to Step 2. Loan processing. The processing stage begins with the issuing of the initial loan disclosures, which will be prepared based on the loan program and terms that you and your loan officer discuss. There are also several other things that happen simultaneously during the processing stage. The processor will work with the escrow company to obtain copies of purchase contracts, title reports, escrow instructions, and any other escrow and title paperwork that is needed for your file. The appraisal on your home will be ordered by the mortgage company, and home inspections and any termite inspections needed will be scheduled by your real estate agent. The loan processor will be verifying all of the information in your file. This includes employment, assets, Social Security number confirmations, identity verification, as well as IRS verification of your tax returns. At this point, you will also be asked to provide the information for the insurance company you will be using to insure your new home. Once your loan processor is done with her or his portion, your file is then submitted to underwriting. Step 3, underwriting. What does an underwriter do? Let me tell you. The underwriter is the person entrusted by the lender with determining your creditworthiness and ability and willingness to repay the loan. He or she does a thorough and complete review of all the documentation and information in your file, not only to ensure your creditworthiness, but also to verify that you meet the specific loan program guideline requirements. It is very common that a conditional loan approval is issued after the initial review by the underwriter. This approval can include a list of questions the underwriter wants answered and/or follow-up documentation that he or she feels is needed to complete your file. All of the required conditions are then gathered and your file is resubmitted for final loan approval. Once the underwriter has signed off on all of the conditions, he or she will issue a clear to close. That means your file is ready to go to the final step, closing. This last step can take as little as 5 business days and begins with the issuing of your closing disclosure. It is super important that you review and sign the closing disclosure as soon as it is issued, not only because it contains the final figures for all the charges and credits in the transaction, but also because the government-mandated 3-day waiting period does not begin until you sign it. You should then arrange for a wire transfer of the required funds or obtain a cashier's check. Once the 3-day waiting period is done, you will meet with the notary to sign the final loan document package. Included in the package will be the legal document that holds the property as collateral for the loan, the promissory note that obligates you to repay the loan, as well as a bunch of other required forms and disclosures. After the documents are signed and returned to the lender, the closing department reviews them for completeness, but also does one very important thing: a final verification of employment. If you are not working where you were at the time of loan approval, the loan is not funding. This is why I tell all of my clients to never make any changes in employment until after the loan closes, no matter how tempting it may be. If you must make a move, be sure to consult with your loan officer first. But let's say everything is good to go. The closing department will then fund your loan by wiring the loan funds to the title company, who then will send the documents to the county recorder for recording. And just like that, you're a homeowner. So what do you think? Was it as scary and difficult as you thought? If you have any questions about this or any other mortgage related topic, please reach out to me. You can always reach me via email, give me a call, send me a text, and of course, connect with me on social media. Please hit the like button, share the video with your friends, and if you haven't already done so, subscribe so that you're notified of all the new videos as they are posted. Thanks so much for watching this week's The Mortgage Minute. I'll see you next week.